opportunity is coming our way. Markets go up, markets go down. Real estate has been going up probably for the last 10 to 15 years, since 2010, 2011, when we saw the last, really big dip. But we see it now. We see it building. The market, the number of properties on the market keeps increasing. Just go to Zillow. See how red, which means homes for sale, in your area compared to what it looked like probably the last time you were looking. This is where the opportunities start. So on one side, we have more and more properties that are on the market. So what's happening? What's creating that? Part of it is the consumer credit crunch. What we're seeing is, record number of credit card balances, debt balances on consumers. You add that to the student loans that are now being repaid or have to be repaid. There was 44 million people who had student loans or have student loans, and they were deferred for the last 4 years. So they haven't had to make those payments. Most people didn't even know how much they owed. And what we see, I just talked to a credit expert, what we're seeing is now 60, 90, even 120-day lates popping up on consumer credit because of the student loans. So we have the perfect mix of higher credit balances, credit scores going down, more debt payments, that you have to qualify for. So over here we have properties and people trying to sell them, more and more people trying to sell them. On the other hand, we have consumers, people who should be buying them, just can't qualify either because of the debt load, just the debt to income ratios, and or their credit scores. Their credit scores being impacted by usage, by not paying on time. The student loan debt is just popping up out of nowhere, and lates are hitting their accounts now. This is the perfect time, the opportunity for real estate investors to start looking at building your rental portfolio, because there's going to be less buyers. So fix and flip and trying to flip into this market is going to be a little bit tougher than the opportunity to build a rental portfolio based more on the BRRRR method, where you could buy undervalued properties. There's going to be a bigger rental pool, lower prices, perfect time for you to be in the game, growing your portfolio, or at least jumping in. And just like the last step, this is going to be the perfect market for some investors. And why I say some investors, just like in the past, markets repeat themselves, and so do investors. The investors who are ready, we help people back when, 2010, 2011, buying properties 10 a year with little to no money down because they understood the strategies, but they also were money ready, meaning they had the funds available when things tighten up. Because what happens to the credit markets? What happens to the banks, the lenders, everything, when they start seeing more defaults on mortgages, more defaults in credit cards, more defaults on everything that they have coming in, they start tightening up. Why? Because one, the Fed requires them to start tightening up credit policies, which means you're going to have a better credit score. You're going to have more money down. The people who are prepared to take advantage of this are the people who are going to take advantage of this. Because part of why this is such a great opportunity is there's going to be fewer buyers, not only on the consumer side, but even on the investor side, because the people who are not money ready, who maybe had a couple of credit hits themselves, they're not going to be playing this game. It's just the people who are money ready, who have the funds, who have the credit score, all of those things prepared before it hits, are the ones who are going to take advantage of this. I saw people back in 2010 buy 10 properties. Talked to them 10 years later, guess what? Those properties had tripled in value, rents had gone way up, and they owed only on 3 of them. So they bought 10 homes using the BRRRR method. And if you're interested in any of these methods, we have the courses because we've gone through this before. So if you're interested in learning BRRRR or how to get money ready, click the link below and we'll walk you through this, because we want to make sure you're money ready. These courses will help you get there. Not only using the BRRRR strategy, what are DSCRs? How do you, set up a HELOC correctly? How do you find other people's money? You want to be in the box. You want to make sure you are one of the buyers when everything comes out, because the opportunity is going to be there, but it's not going to be for everyone. The opportunity is to be greater for those who are money ready. So being prepared is money ready, but it's also thinking differently now. Now you're going to have to do lower loan to values, meaning you're going to have to look at something that's maybe at 70% instead of 75 or 80, because they're going to be out there. They're going to be available. The banks are going to be a little tighter on your credit, so you have to have a great credit score. Work and protect your credit score. Number 3, you're going to have the funds. You might have to put down 5 or 10% more in this market, or have more reserves, more money available to make the loan side work. Be credit ready, get your credit score up, make sure your numbers, your buy box is a little bit better, and get money ready. When I say money ready, here's what I mean. Now, before the credit crunch starts, make sure you get the HELOCs on your property, your primary residence, your rental properties, whatever it may be, before the banks, the credit unions tighten up, have the qualifications a little bit tougher. Maybe the values of the properties come down so you could get less. Maybe their LTV requirements go down. So lock in those HELOCs now while the property values are still up, while the credit unions and everyone are still lending at higher loan to values. Do that. Make sure you're moving over or have the business credit card so it's not impacting your credit score, because that was another big thing. And get the credit and the credit cards you need to make sure these properties get done. Just make sure they're business credit cards. Number three, something I've been doing for the last, almost 20 years now, is using real people's money. That means people in your community, in your area, that is just looking for a better return. How many people do you know, especially people 50 and older, have some savings, who need something more than 1%? So it's called real people's money. It's money that you could use for purchases, long-term, short-term, down payments, carry costs. If you could have a use for money, you could use real people's money. If you want to learn about that, once again, we have a great course because I've been through it. I've done that. But having these sources that are not bank dependent, not lender dependent, are going to open these opportunities up for you to succeed where others can't. So let's wrap this up. There's going to be opportunities because there's more homes on the market. There's less buyers, not only consumers, but investors. But you have to make sure you watch your numbers better, because credit is going to be a little bit tougher to get. Make sure you have the money available. Is it lines of credit, HELOCs, business credit cards, real people's money, whatever it is, make sure you have it, and make sure you maintain that credit score. Because without a good credit score, it's going to eliminate some of your opportunities with the lenders, even with some of the HELOCs and business credit cards. Be the people who are money ready, credit ready, and change your box, and you're going to be able to create the portfolio. You're going to be able to get those deals. We just saw someone pick something up for 50 cents on the dollar. What a great opportunity. Those pop up now. And another thing I want to let people know is, like, these don't pop up every day. You still have to put in the work. You still have to put in the effort. But if you do put in the effort, you can find great deals, 2, 3, 5 a year when these opportunities come up, to increase that portfolio, to get that wealth, that generational wealth you're looking for. So be one of the people who take this opportunity on. We put together some great information from our book, 100% Financing, Being Money Ready, to the courses, like I said, Burr, HELOC, real people's money. Even if you want to learn about DSCR loans, we've put together some great material. Why? Because we want you to be successful. It's really cheap material as far as cost, but it's very powerful and will help you with. Check the link below, and we'll catch you on the next video.